We are living through transformational times as gold investors, as silver investors. Tomorrow, we're going to get news that could be a complete sea change, a complete regime change, a complete paradigm change, no matter what you want to call it. But I've got a couple secrets I'm going to share with you today, a couple things that we know about what's really going on, and it will tie directly back to your decision. I hope you've made that decision. Have you made the decision? I ask you to invest in precious metals, maybe also to invest in precious metal mining stocks, because guys, let's realize something. If you're living through a transformational time, like I believe we are right now, we probably don't realize it. Usually it's something you realize in retrospect. You look back a year later or a couple of years later and realize just what is going on. But tomorrow, I was talking with Mike, one of the owners over at Pimbex this morning. He said it's like the Super Bowl. I mean, all this massive buildup. Mostly at this point, I'll let you in on a secret, guys, a symbolic change in monetary policy to be expected by the Fed. I mean, let's be real. Gold and silver have already priced in what they expect is going to happen tomorrow. They see way out into the future, just like you do. But nonetheless, from a mainstream perspective, this could be a massive, massive catalyst for the markets and for the precious metals. So tomorrow we'll get the big news. Scary times. Hey, look, be prepared. I want to be real with you, okay? And I'm going to be honest with you. Sure, I can come on here. I get accused. You may get accused too from time to time of being a silver pumper or a gold pumper. Look, I believe long term we are in for great, great times in the precious metals. Tomorrow could, and I'm going to say this only once during the live stream, tomorrow could be a sell the news day, meaning we could have a down day in the metals. But you know what, Buttercup? Yes, Buttercup, basement dweller. You probably like that better. Buttercup is a term of endearment. It's okay if we have a little down day tomorrow. It's okay, because gold and silver, are you feeling it? They're like building a base right now. I mean, how do you feel about this? Even if gold were to drop back to $2,500 per ounce and build this solid base that through the end of the year, right? Happy times, ho, 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 Santa Claus is coming to town. We know all the craziness that we're likely to see through the end of the year, that gold could build a strong base of 2,500 and rally through the end of the year. Everybody's calling for it. All the big banks, all the big traders, everybody's saying it. That does not mean that it's going to happen for sure. You know how that goes, right? But even the world's biggest Japanese bank, whatever it was called, Mumka, I've never heard of them before. It's a Japanese bank with 168,000 employees, Mitsubishi something. Hold on a second. Let's see. Here it is. I see it here. Let me go into the pile of knowledge. MUFG, M-U-F-G. I always feel like I'm saying, when I say M-U-F-G, like I'm saying a dirty word. But nonetheless, they're calling for $3,000 gold. Where does that put silver? Hi-ho, silver. Okay, tomorrow, Super Bowl for gold and silver investors. We'll see. I believe it mostly to be symbolic. But the Fed, here's one. I got a lot of little secrets we're going to talk about today. We're going to keep this in the basement, okay, basement dwellers? We don't need to take the Fed so seriously. Sure, CNBC is going to take it seriously. Sure, Yahoo Finance, all the big news agencies. But we know that the Fed is losing their mojo, losing their power, losing their ability to manipulate the markets. Only a few of us know this, right? But remember, I just want to throw this in. That Federal Reserve, it was created by an act of Congress in 1913. And a president who subsequent, like 2 years later, deeply regretted his choice. So the Fed has lost. Everybody's going to be all worked up tomorrow. And I'm going to be mad. It's like when I want mainstream media, because I'll tell you what, everybody's going to be all worked up about the Fed and what the Fed is doing. But the reality is this: the Fed has lost to the national debt. The Fed has lost to the deficits, and the Fed is in the process of losing to the BRICS countries. I want to show you something that I don't think we've talked about this before, and I think this will demonstrate to you, because the Fed has said it themselves, right? The national debt is a big, big, big problem. But of course, our politicians just ignore them, right? They just ignore everything about it. But I want to show you something new that I think will demonstrate to you in no uncertain terms what we're talking about. Yes, one of our favorite websites, the U.S. Debt Clock. There's our U.S. national debt. Look, we can just point at that alone and say that's a big problem. That's why the dollar, the real value of the dollar is going down. The real value of silver and gold are going up. But I want to point this out to you. This right here, $35.4 trillion in debt. That creates this down here, the interest on the debt. That makes that go up and up and up, almost $1 trillion a year right now in interest. So the national debt, right, obviously, and with higher interest rates, makes this interest expense go up. The interest expense makes this go up. The U.S. federal budget deficit, official, $2 trillion. Okay. And that, the deficit makes the national debt go even higher, which in turn, are you following me here, makes the interest expense go even higher, which is what we've been experiencing now over the last, in a very crazy way, over the last couple years, but it's been going on for a couple decades. So again, as the interest expense gets even higher, that makes the deficit go even higher, which makes the debt go even higher. We'll go through it one more time. And now with the higher debt, imagine seeing like 50 trillion up here and 2 trillion down here, a higher interest expense, again, makes this. Do you see the doom loop? This is the doom loop. Follow my yellow finger, right? National debt goes up, interest expense goes up. Interest expense goes up, the budget deficit goes up. Budget deficit goes up, the debt goes up even higher. It's a doom loop. This is why the Fed has lost their mojo, has lost their power. Now, they're still powerful, don't get me wrong, but it's waning. And we're witnessing right now the final battle between precious metals and the U.S. dollar. I firmly believe in that. While we're here, it never ceases to amaze us, basement dwellers. Let's go look at silver quickly. Wow. I mean, it goes up and up. The dollar to silver ratio, again, higher, 531. That means for each 1 ounce of silver that will be produced this year, there's $531 of M2 money supply being created. $531. Wow. And there you can see up in the middle, it explains it. But I think I did a pretty good job of explaining it. $531 for each and every ounce of silver that's pulled out of the ground. Do you feel it? I mean, does that tell us where silver's going? I forget who it was last night, talking about $75 silver. It's going to happen. I believe it. Okay. Don't make any financial decisions based on anything that I'm saying, but let's go out. It's time for us. Take our blood pressure medicine. Let's go check on the current price of silver and gold. What do you say, basement dwellers? Let's run out to channel sponsor Pimbex. And this was from about 20 minutes ago. So I'm going to press the button here. Take a deep breath. Let's see where we are. Okay. Gold is down $9 per ounce, $2,572. Let that sink in. $2,572. Silver, $30.85. I want to go down. We have $31 silver, basement dwellers. We are on the cusp. No guarantees. I think we're 50-50 right now, but we are on the cusp of a major potential breakout in the silver price. I heard word last night that the one of the trading desks at Goldman Sachs is saying that silver is one of the best bets right now in all the markets, that the silver price is poised to go much, much higher. Hey, if you think silver and gold are going to go higher, I'm not giving financial advice, but if you ever decide that you do want to get your hands on some physical metal, you want to hold that silver in your hand, that gold, that platinum group metal in your hand, please support channel sponsor Pembex. I was talking with Mike, one of the owners, this morning, and I'll just tell you what I told him. I said, I feel very lucky to have you guys as a sponsor because I've received overwhelming, from you, the basement dweller community, overwhelming positive feedback from all of you regarding your interactions, your purchases that you've made from Pembex. All I ask is that if you're out there shopping around online for precious metals, give Pembex a chance. Throw them into the mix. A lot of you already have, right? But what I love about Pembex, and that's where I buy my metal, is that I know I'm always getting ultra competitive pricing. I know they have a great selection, but really one of the key things for me also is that it's a company I can trust. And if you ever decide to convert all or part of an IRA, please, please, please take your time and don't forget, talk to the guys at Pembex. Hey, thank you. We got a super chat. John Goldsworthy. I wonder if that's his real last name. I'd be Ron Silverback if I could. Thank you for the super chat, my friend. Okay, guys, we got more to talk about. So all of this going on, what I just showed you with the incredible doom loop that we're in the United States with our current fiscal situation. That's called fiscal. Let's do a little quick learning, basement dwellers. The debt, the deficits, that's called fiscal policy. What the Fed does with their target interest rates, that's called monetary policy. So tomorrow we're going to hear from the Fed about monetary policy, but that will have an impact on our government's fiscal policy. So like the Treasury Department and Janet Yellen, they handle the fiscal policy. They don't handle it very well, but they do handle it. And Gomer Powell, we're going to hear from Gomer tomorrow, right? He's going to, hopefully it's not a surprise, Sergeant Carter. I decided not to cut rates. If that happens, Katie bar the door. If they cut by 0.25%, I really feel like we could have a little bump in the road for silver and gold. Long-term, we're fine. If they cut by 0.5%, right? But let me show you something. This is getting more and more fascinating. Let's run out here on a little field trip to the Chicago Mercantile Exchange. And look at this, that they have the Fed Watch tool. They've got the countdown to the Fed. 1 day, 3 hours, 4 minutes. But that's not what we're here for. I mean, they're acting like it's a rocket blast off. Maybe it will be a rocket blast off. But here are the odds. Over here, there's the according to the investment betting community, there's a 63% chance, guys, that we're going to get a 0.5 percentage point cut tomorrow, according to the Chicago Mercantile Exchange. And only a 37% chance that we're going to get a 0.25% cut. I guess, based on this, there's a 0% chance that we're going to see no change. So we're going to see something tomorrow. It would be shocking if they don't do anything. We're going to see either this right down here, a 0.25% cut, or as the statistics here show us, a 63% chance, so almost a 2 out of 3 chance that we're going to get a 0.5 percentage point cut tomorrow. I'll be real curious. What do you think? How the market will react tomorrow to a 0.5 percentage point rate cut? I don't know. But then I hear so many other people saying, it's going to be a quarter. It's going to be a quarter. We'll see how it all plays out. But all these factors are playing into each other and creating an environment where the Fed is losing control. Inflation, deflation, stagflation. Just want to show you what Jamie Dimon had to say recently. Oh, wrong one. Where'd it go? Hold on here. There we go. Jamie Dimon. This comes from CNBC. Jamie Dimon says he's the CEO of JP Morgan Chase, the most powerful investment bank in the world. He said the worst outcome is stagflation, a scenario he's not taking off the table. Interesting. We've been beating guys, us basement dwellers, we've been beating the table. Hold on here. I'm going to see if I can do this differently. Let's see if this works. Does that work? Okay, hold on here. That doesn't work. Hold on, guys. Oh, here we go. Can we see that? I don't know. Here we are. Okay. We've been beating the table on stagflation for a year. Stagflation, just to quickly review, was what happened in the 1970s. And in the 1970s, how does this sound to you? A silver price that goes up 20 times, actually more, 20 times, not 20%, 20 times. That's what happened in the 70s. That's what happened the last time we had stagflation. Gold went up like, I don't know, 18, 17 times, something crazy as well. That's what happened the last time we had stagflation. Here we have the CEO of the world's biggest investment bank warning about, yeah, you guessed it, stagflation. Should we pay attention? While we don't like JP Morgan Chase and they've manipulated the precious metals markets for decades, we will pay attention and we will like Jamie at this point, because if he is correct, we could be in for an incredible ride in the precious metals. Okay, here's the key points. JP Morgan, Jamie Dimon said Tuesday he wouldn't rule out stagflation. Hopefully we're still alive here. Dimon's comments come at a time when investors are turning their attention to signs of slowing growth. Think about that. How do you think the economy is doing right now? Ask those 818,000 people that it had make-believe imaginary jobs, according to the Bureau of Labor and Statistics, from March of 2023 through March of 2024. They just were off by almost 1 million jobs. I digress. Slowing growth as inflation has shown signs of cooling. He said he worries that a raft of inflationary forces on the horizon, such as, like we just talked about, boy, we're as smart as Jamie Dimon, guys, higher deficits and increased infrastructure spending will continue to add pressures to an economy still reeling from the impact of higher interest rates. Okay, I got to do one more thing. He said, quote, I would say the worst outcome is stagflation, recession, higher inflation. Dimon said at a fall conference, whatever, in Brooklyn, quote, and by the way, I wouldn't take it off the table. Okay, well, Jamie, we like that. We got one more thing here in green. Dimon worries that a raft of inflationary forces on the horizon, such as higher deficits and increased infrastructure spending, will continue to add pressure to an economy still reeling from the impact of higher interest rates. And what about the fact that the BRICS in the world, I would call that geopolitical forces that will add to inflation as well. He says, quote, they're all inflationary basically in the short run, the next couple of years. So it's hard to look at it and say, well, no, we're out of the woods. He says, I don't think so. Guys, inflation is going to rule the day. Inflation is going to propel that silver you might be looking at right now, right, in your basement, that gold you might have, those precious metal mining stocks. It will propel the price of the metals higher. That's just my opinion. Don't make any financial decisions based on anything I'm saying today. I'm only right about 68% of the time. The bank leader has previously warned of an economic slowdown. We are heading into an economic slowdown. At the same time, I got to get him out. Okay, hold on. Special guest appearance today, an economic slowdown, while at the same time, we are going to have inflation. This guy, he'll be tomorrow, right? Old Gomer Powell, right? Surprise, surprise, surprise. I didn't know what I was talking about, right? He's in a box, not just here, figuratively, but literally. He's got a recession on one side that's barreling down and inflation on the other. Okay, he is in a box, right? Inflation with recession is this is the stagflation box. Okay, because when he's over here and he wants to fight inflation, okay, how does he fight inflation? he's got to raise interest rates, right? Think about this for a second. He's got to raise interest rates. That's what he did over the last 4 years. But when he raises interest rates, that makes this worse. The recession, that slows the economy, what we're in right now. But if at the same time, right? So how does he deal with that? He lowers interest rates. That makes hyperinflation, right? So how does he deal with that? Oh, well, then he's got to raise interest rates more. That makes it's not a joke. This box symbolizes everything that is wrong with our country. And all of it, a lot of it feeds back to what we looked at earlier. Okay. Out of control, complete out of control spending and debt levels, thanks to our trusted servants in Washington, D.C., right? I mean, give me a break. Okay. The Fed's been neutered. Don Indris, right? A big friend of the channel. What it all boils down to. This is one of the little secrets. Okay. You ready for a secret? Don Indris loves this, but it's true. Mathematics show no forgiveness. The laws of mathematics show zero forgiveness on the altar of truth, meaning in the end, right? Calculators win. Not even, I heard somebody say once, another way that not even God can change the fact that 2 + 2 = 4. Maybe he could. This is not a religious channel. I'm not making a religious statement. That was just a figurative thing that made sense, right? Math, you can't, eventually the laws of nature rule out. And guys, where we are right now in this country is a precarious situation. The Fed is losing control, right? At a time also on top of that. I mean, think about this. We're in a situation financially right now in the United States, okay, that's worse than we would okay, right now. Here's a truth bomb. This isn't the secret. That if you don't, if you have a weak heart, turn the volume off for a second. Right now, we're in a financial situation in this country, okay, that's worse than we were when we came out of World War II and the Great Depression. Because remember, World War II was kind of right after the Great Depression. We'd just gone through the Great Depression and the biggest war. I used to say war, but I got yelled at by 1,000 people. So I changed for you, war in the history of the world. Now, right now, right, when things are supposedly good, right now, hold on a second. We got another special guest. Boy, it's a double feature today. You didn't know you were in for that. Remember? Everything's wonderful in the U.S. economy. Everything. What are you upset about? Everything's great. Well, I'll tell you, Janet. What we're upset about is that right now, our financial situation is in a state of emergency, okay? And you're trying to tell us everything is awesome, everything is cool when you're part of a team. I know, I won't sing anymore. Nonetheless, right? We're in a state of emergency. It's mind-boggling. Okay, I think my brain's going to explode. I'll say it calmly. Right now, basement dwellers, we are in a family emergency, okay? Because we are sitting in a worse financial situation than where we were at the end of World War II and the end of the Great Depression. And supposedly everything's great. Well, I just have one question for her, Janet. What's going to happen if things aren't great, right? I mean, it is precarious. And I promise I'll be a positive the rest of the live stream, because on top of it, think about this. We got the election coming up. All right, end of subject. You know what's going on there. Welcome to the Banana Republic. Okay. Anyway, on top of that, what we just talked about with the fiscal situation, the war, Great Depression, blah, 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 big election. And guys, there's another little secret. There's a massive BRICS meeting, October 22nd, end of October. Okay. All of this is happening at the same time. Do you see it? Look, I was wrong. I owe you a big apology. Right? I said 2024 was going to be crazy. Last year in December, I said we predicted $2,500 gold in December by May. We didn't get there. We got to 24.75. We were darn close, but I also was wrong. We were wrong. A lot of us, right? That 2024 was going to be an absolute crazy year from like a black swan perspective and everything else. And really, it hasn't happened yet. But guess what, Buttercup? Buckle up, because the year is not over. Okay, the Fed, let me just finish railing against the Federal Reserve for a few seconds. They're stealing our money 2% at a time, period. There's no other way to say it. That's the best case scenario. They're stealing our money by 2% inflation. That's devaluation of this stuff. It's time for the daily. Oh, there it is. It always floats by when I talk about it. Okay, they're stealing it. That's not moral. That's not right. And that is not what our founding fathers had in mind for our country. Money is a moral contract. Monetary policy is now playing favorites, right? The wealthy have been big beneficiaries of the Federal Reserve. And think about this Fed tomorrow when he's up there talking, putting on a show about how he's so, concerned about the average American, blah, blah, blah. You don't own the Fed. The United States government doesn't own the Fed. The Federal Reserve is owned by the member banks. Banks. The Fed. Okay? The Federal and Federal Reserve is no more federal than the Federal and Federal Express, the company Federal Express. Their Federal Express is as much a part of the United States government as the Federal Reserve. The Federal Reserve is owned by the banks. Now, I just want to throw this out there. Who do you think they're looking out for? Huh? If they're owned by the banks, who do you think they're looking out for? I'll let you answer that question in your own beautiful mind. And by the way, I forgot. Thank you for being here. You, 800 of us are the most important part of Ron's Basement. Thank you for your time. I appreciate it. You got a good head on your shoulders. We want to learn from you. One way we can learn from you is if you're willing to share your thoughts over, I don't know, wherever it is on your screen, the comment section. You don't have to agree with me, right? I don't agree with myself a lot of the time. And I can assure you that Silver Susie, my wife, she agrees with me even less. And that's okay. Because if we disagree, that gives us an opportunity to learn things. We want to hear from you. Please leave a comment, subscribe to the channel, and give this video a thumbs up. That helps get the word out to more people. Where were we, basement dwellers? You know what? Later, I'm going to try to sell you this. Don't go away. It'll be the most exciting part of your day. Okay. Final thing on the Fed, and then we're moving on because we're almost out of gold. Get your gold while you still can. It's almost gone. Volcker was the guy that solved I think he was a Fed guy. I don't know, whatever he was. No, he was the head of the Fed because he's the one that raised interest rates to 15%. Both Volcker and Alan Greenspan have both talked about how much and how the attractive attributes of precious metals. Okay. All right. Alan Greenspan, I got some old quotes from him saying it's the only form of real money. Remember, he was the head of the Fed during around the time of the tech bubble burst. Volcker was the head of the Fed in like the 70s or 80. I think he came in 80 and raised rates to 15% under Reagan. Okay. Those guys both talked about, Volcker has said that that inflation is not necessary. So tomorrow could be that sell the news days. What's going to happen? Right? I'll tell you, this is happy news. I want to cover it quickly here. What's going to happen, though, now that we're going into this lower interest rate environment? Are you wondering? Are you concerned? What's going to happen to the price of silver? What's going to happen to the price of gold? Are you concerned that maybe you own precious metal mining stocks and what's going to happen to them? Well, I think I may have some probable answers for you. Let's go and take a quick look. Here we go. What happens when the Fed lowers rates? Look at that. That's Exter's pyramid. More on that later. Okay, we're going to have people. It's going to start, right? Lower interest rates on CDs, money markets. That is That is your neighbor's safe harbor investment. Oh, I bought a 12-month CD at 5%. Well, now they're only going to be, as rates come down, if that's what happens, they're going to be much lower. Inflation will be going up at the same time. Remember what Jamie Dimon just said? Stagflation. And the stock market will be suffering, struggling. Weak economy is going to hurt corporate revenue while at the same time, right, their sales are going to be going down while their expenses are going to be going up because we're going to have inflation because of all the aforementioned reasons, not the least of which is just basically lowering interest rates is a catalyst for higher inflation. And with the stock, bear with me, with stock market challenges and fixed income less attractive, right, where are people going to go? People are going to go to precious metals, guys. Think about it. You're going to have this massive number. We'll go back to Exter's pyramid real quickly, but we're going to have this massive amount of money, right, that's sitting in CDs and money market accounts, making 5% right now. Suddenly people are only going to be making, let's say, 3%. Okay. And at the same time, and this is all going to unfold over the next 18 months, inflation is going to be going through the roof. And look, everybody went through that last period of inflation. What was that, 2022? They know the pain, the agony that caused at the checkout lane at the grocery store. Wait till you see this comment I got to share with you later from one of you guys. We share one of your comments in every live stream, but wait till you see this comment I'm going to share with you later. I may just do it even earlier because it applies to what we are talking about right now. Okay. People are going to be, they're going to be dealing with inflation. Okay. And they're going to be like, oh my God, I got to do something with my money because I'm only making 3% now in my CD or my money market. Nothing against that. I've got some dry powder in a money market account, but I'm only making 3%. And my gosh, the cost of food's going up 20% a year, 30% a year. What am I going to do? Put yourself in that person's shoes. Am I going to keep losing money in real terms, keeping it in a bank account or a CD? No, I don't want to do that. Should I put it in the stock market? Well, the stock market is a bubble and it's struggling. No, that's my safe money, right? That's safe harbor money. Am I going to put it in real estate? No, this is happening in China right now. This is happening. No, you know where they're going to go? They're going to go to silver and gold. And what is so awesome for you and me as precious metal investors is how small these markets are. In particular, the silver market. Here's a secret for you. The silver market's really tiny. Okay. The whole entire world only provides about 1 billion ounces of silver per year. 1 billion ounces. I know your stack at home's probably bigger than that, but nonetheless, 1 billion ounces at $30 an ounce, that's $30 billion. Okay. Think about that, right? That's chump change when you look, right? So the impact on things like the silver price, independent, just money flows, independent of the supply demand dynamics. We know we could talk about that for ages, right? Unbelievable demand growth for silver, while that supply number, I told you, 1 billion ounces is actually going down. But if just a drop, I mean, less than 1% of this money, where is it? There it is. Right? This is Exter's pyramid. If just one little percent of that bank money, government bonds, people are going to lose faith in those, right? Or just a tiny bit of that money goes from up there. See on the bottom, gold and silver? That's really representative. I mean, they are tiny, teeny weeny, itsy bitsy. Elite is another way to say it, basement dwellers. Everything above gold and silver is fake, synthetic, make-believe, unicorn fart dust, right? Stocks, right? Overvalued. I mean, remember the data from yesterday about NVIDIA? You know, NVIDIA, like the AI stock, that's why its value is like 12% of the nation's GDP. I mean, if 1% of NVIDIA's market cap got scared and wanted to go to gold and silver, it can't handle it, right? You've heard, I think it's Doug Casey used to say, it's like trying to drain Hoover Dam with a garden hose, right? All that money, right? All the water in Hoover Dam being all that money trying to go through one little garden hose. It doesn't work. I'm not giving financial advice, but baby, am I optimistic? Are you optimistic? I'm happy you're here. Susie wanted me to put the banner up. Hold on here. There we go. There's our banner with our sponsors and some other information. If you get bored watching me, which I know that could never happen, read the banner, okay? All right, guys. All right, let's move on here. We're in the I debate whether we should talk about this, but the reality right now for you and I, are you a gold investor? Do you own physical gold? I do have a little tiny bit. I'm a silver stacker and a gold mining stock investor, but the reality for us, this is our day. What would it mean? I'll ask you, what would it mean if we truly were right now in a transformational time? What did Chinese President Xi say to Russian President Vladimir Putin not too long ago? Right? Those guys are buds, right? They go visit each other and they get along. And as they were leaving, President Xi said to President Putin, he said, we are truly living in a transformational time period. Okay. And you and I are at the forefront of the change. Look, I'm an American. Look at all my American flags. I love my country, right? But I'm just telling you, I'm reporting the news. I hope it doesn't upset you. Right? I love my country. I love Thomas Jefferson, right? The biggest threat to America is not an invading army, but big banks, big corporations. I digress. If we go off the premise, can you believe that we are right now in transformational times? Again, I'll repeat this. You don't realize that you're in a big period of transformation until after you're through it. Then you look back, right? I believe we are, right? And I believe you are probably smart enough to realize this as well, that we are in a transformational period. As part of that, what does that mean for precious metals, right? Are we in the final cage match between the US dollar and gold and silver? Don't forget, guys, that we were on the gold standard, the silver standard in this country. It worked. It was wonderful. It was great. Okay. But now, right, in Bank of America, what did Bank of America recently tell us? Bank of America, I can read it to you because this is probably the biggest piece of news that only the people in the know are talking about. Okay. And trust me, people in the know are talking about this. See if I can pull this up for you quickly. Here it is. Here's the quote right here. See if I can highlight it. Bank BOFA, that stands for Bank of America. You probably knew that, but nonetheless, an analyst, there's Bank of America analyst estimate. Sorry, let me start over. Bank of America analysts estimate gold has now surpassed the euro to become the world's largest reserve asset, second only to the US dollar. Guys, we precious metals investors, we are in the final innings, or we're getting into the final innings, the final cage match between the dollar and precious metals. It's happening. Okay. Now, what could speed this up? The BRICS, right? Some type of financial crisis. We saw what happened when Japan just tried to raise their interest rates by a quarter point 4 or 5 Mondays ago. It was the end of the world as we know it, right? I mean, so that could speed things up, but I want you to think about this. I want you to envision you and I go to Las Vegas. Okay. We go to a boxing match. It's that final cage match between the US dollar and, in the other corner, precious metals. And we need to make a bet, right? Okay, so we're listening to what the analysts are saying, and they're pointing out some interesting things to us. What does it mean to you that if you want to bet your money on the US dollar, they're going to say, well, the US dollar's been around for about 200 years. Whoa, that's a long time. It did great when it was backed by silver and gold. However, it's no longer backed by silver and gold. And in the 50 or so years since it's not been backed by silver and gold, it's lost about 99% of its value relative to gold. That's the one corner. You can bet on the dollar, right? If you hold these, I lost my dollar. If you hold these, woo, you're betting on the dollar. If you've got money in a bank account, and I've got some money in a bank account, okay, I'm not, I have to use these to live. That money is a bet on the dollar, betting that it will keep its value. But in the other corner, we have gold and silver. Not 200 years. They've been around 5,000 years. 5,000 years. And they have a near perfect, but there's more, but they do have a near perfect track record of holding their value. Remember in Bulgaria last week, somebody dug up some gold coins that were 1,500 years old. Your great grandpa, to the 99 millionth degree, lost 5 gold coins, and some archaeologists found them. Guess what, Buttercup? Those are still, excuse me, and I hope you don't mind me saying Buttercup. That means I like you. Those coins are still worth as much today as they were 1,500 years ago, probably more. So I digress. Gold, silver in this corner, 5,000 years, perfect track record of maintaining value. But there's more, right? Because think about this same fight that we're about to witness between paper dollars, electronic, backed by nothing dollars, and silver and gold. Silver and gold have been in the same fight with other fiat paper currencies hundreds of times. I was talking with Lynette Zhang, and I said, hasn't it been in the same fight? Hundreds? She's like, yes, thousands of times. And I got news for you. Gold and silver have won every single time. Now, maybe things are different, okay? But who are you going to bet your money on? For me, it's easy, okay? And they aren't going to tell us, they aren't going to warn you. These people, right? These people, where is she? Wow, she gets a double feature, Janet, right? She's not going to warn you that things are bad, right? Things like the U.S. debt clock, people like me, right? But don't look, do your own work, develop your own thesis. There's books, right? The Creature from Jekyll Island. Somebody was telling me about that last night. There's a lot of people with different opinions, but they aren't going to warn you. I got news for you. Remember when we had that little banking crisis back in, when was that? Like a year and a half ago? Silicon Valley Bank, Silicon, whatever it is. I apologize to you. I don't pronounce a lot of words properly, but Silicon, SVB, they went belly up. Okay. The weeks before, the months before they went belly up, okay, guess what? When you walked into their bank branch, there wasn't, every time you go into a bank, I want you to think about the last time you've been into a bank. When you go into a bank, there's always that, what do they call that, placard or that sign with all these, you can get the super platinum checking. And they always, this is great. This is ironic. Those placards they have in the banks, right? When you walk in, super platinum checking, platinum gold savings. They always refer to precious metals. Think about that. I never thought about that before. I could go to my bank right now. I do love my bank. Nice people. I've known them for 25 years. I can walk there. But when I walk up, it's always signs, gold checking, platinum. Why do they think about it? Why do they refer to their unicorn fart dust paper accounts in terms of precious metals? It's pretty interesting. I digress. They aren't going to warn us this is going on. This cage match between the dollar and gold. No, they aren't. And they are going to put up a massive, massive fight. Okay. Just like Silicon Valley Bank didn't have placards in their lobby for the months before they went belly up saying, warning, we're having financial troubles. You may want to consider taking your money out of our bank. No, there was no warning. Okay. No warning. I'm not saying the sky is falling. I'm not saying, but the sky could fall. Right? The sky could fall. All right. Are we almost out of gold? This is another crazy thing to think about. As gold and silver, are we almost out of silver? We know that answer. But what about gold? We don't examine gold. Are we, as the world, really running out of gold? And I want to run out. This is a fascinating article that talks about the situation going on in the gold market right now. That is something that we're, again, not hearing many people talk about this. This came from, mining.com. Okay. Dearth of, I think a dearth means shortage of quality new gold discoveries puts supply growth under threat. This is a report. Look at that. You probably got a nugget bigger than that sitting in your basement, don't you? I know what you're up to. In recent years, gold discoveries around the world have become more scarce and smaller in size. More scarce, smaller in size, dampening the outlook for future supply of the metal, according to the latest analysis by S&P Global. The new report shows that there have only been 5 major gold discoveries since 2020. Only 5, guys, in the last, 5 years, adding about 17 million ounces to the firm's database of gold discoveries. So look at this chart. Let me pull this up. Okay. The black line, the important thing to look at, there's 2 important things. Hold on. We're going to draw some pictures. This is going to help propel the gold and silver price even higher. Do you agree with me? If you don't, leave a comment, send me an email. But to me, this is undeniable proof that the gold price is going to go higher. This dotted black line is gold exploration budgets in billions of dollars. If we go back to 2001 and we look, definitely there's an upswing in the amount of money being spent on exploring for gold. However, if we also look at these shaded yellow lines, those are the gold discoveries. And look, I mean, it is absolutely stunning to look and see that the amount of gold being discovered is going down. So the black dotted line is the amount of money being spent. They're spending more and more billions of dollars in the amount of gold being discovered. Guys, this represents the future supply of gold. Okay? Think about it. Where's the gold going to come from? Right? They're spending more and more money to try to find gold, and they're finding less and less. There's more we're going to talk about in that article, but this is a great time for me to mention our 2 mining company channel sponsors. Actually, First Mining Gold is a development stage mining company. They've got 2 multi-million ounce projects in Canada, Springpole in Ontario and Duparquet in Quebec. They've already been drilled. The gold's already been found. It's already been defined. Okay. It's in the development stage, meaning the permitting phase, right? There are very few projects of this size and scale, especially in Canada. If you want to learn more about First Mining Gold, you can go to their website, link in the description, and you can email Paul Morris, their Director of Investor Relations. And Fortuna Mining, boy, do they have a lot of gold and silver, and they're actively mining it right now in Latin America and West Africa. Let's go back. You can learn more about them at their website. Let's go back to this article because there's more. There's more to be found. Is the world running out of gold? And what are the implications of that? You know the implications. We know what's going on with silver, and the silver stats are the same thing. S&P's report noted that while the number of discoveries and amount of gold continue to grow each year, most of the assets were discovered decades ago and only recently met its criteria. So a lot of the stuff that is being discovered, quote unquote, was actually discovered decades ago. It also pointed out that the average size of the recent gold discoveries has shrank at about 3.5 million ounces compared with 5.5 million ounces during the 2010 to 2020 timeframe. In fact, none of the discoveries made over the last 10 years entered the list of the 30 largest gold discoveries. What is that telling us? To me, it's pretty clear, right? That the supply of gold as we move out. And are they going to tell us that later in this article? Be prepared, okay? The trend, said Paul Manalo, supports the firm's long-held view that the industry's focus on older and known deposits limits the chances of finding huge gold discoveries in early-stage prospects. Quote, the lack of quality discoveries in recent decades does not bode well for the gold supply, said Manalo. Based on the latest monthly gold commodity briefing service, we expect gold supply to peak in 2026. Peak gold, guys. Remember peak oil? Peak gold, 2026 at 110 million ounces, driven by increased production in Australia and Canada and the U.S. He went on to add that gold supply is expected to fall to 103 million ounces in 2028. Wow, that's a pretty big drop. 2026, 110 million, and it's going to drop in 2 years by what? 6% probably to 103 million ounces. So all of this is telling us only one thing, whether we're talking about gold, whether we're talking about silver, right? Do you realize, right? Do you realize this stuff here, this came from CoinShop Chris, our friend CoinShop Chris at coinshopchris.com. There is no coinshopchris.com. There is a CoinShop Chris YouTube channel if you want to get the latest. But nonetheless, there's only this. Only so much on the planet. They aren't making any more of it. The planet only has so much. It only has so much gold. I don't have any gold I can show you right now. But anyway, you know what I'm saying, right? When you own silver, when you own gold, how does that make you feel, right? You own something that can't be printed. You can't press a key on a keyboard and make more of it. No, guys, it's limited. It's scarce. It's finite. That's the fancy word, finite. There's a finite supply of gold and silver on the planet. Let's go out to our viewer comment of the day. This was a great one from our friend Denny the coffee man. Oh boy, I'm in PFC. Hold on here. How did I do that? Hold on. Add to stage. Okay. All right. Got it. Okay. Sorry, guys. I just learned something. Hey, look, there's Susie. Everybody say hi to Silver Susie. There we are. That's the last time we went out to lunch. And we were drinking water because I have a conniption fit if we drink soda because it's a ripoff at restaurants. Oh, boy. Here. Hold on. This, my friends, while we're here, right, this is the price of silver in Argentine pesos over a 2-year period. Just look at that. That's what happens when a currency fails. But that's not what we're here for. It's red. It's going to pop up soon. There it is. Read that. I mean, this just shows us how the dollar has lost value. You can't argue. On November 5th of 2020, less than 4 years ago, okay, mortgage rates were at 2.75%. Doesn't it? I mean, what are they at now? I think they've come down, but they're like 6 or 7%. They're double. Look, don't look at me. Look over there. Okay. And gasoline, fuel, petrol was $1.80 a gallon. Does anybody call it filling station? I'm going to get in trouble here. My mom and dad, my mom watches. Hi, Mom. I appreciate you being a basement dweller. But we were at a softball game over the weekend, and my mom was they were talking about a filling station. They call gas stations. So less than 4 years ago, basement dwellers, you could go to a filling station and get gasoline for $1.80 a gallon. We all say things differently. I love my mom more than anything in the world. She's funny. So what does that tell us, though? What's the takeaway there? It's pretty obvious. This thing is going down in value. Okay? This. Okay. Oh, it's missing something. You know what it's missing? Hey, guys, this is heartbreaking for us. Do you notice anything different on this one? See that up at the top? What does that say? Silver certificate. Oh, yeah. 1935. There you go. You see that? This was redeemable for silver. Huh. I wonder if that would have happened. What Vinny? Thank you, Vinny. Vinny, the coffee man. Vinny owns a coffee company in Miami, buddy of mine. Anyway, would that have happened? What we just saw, right? Gasoline, again, gas is cheap right now, right? $2.80 a gallon here in St. Louis. Would that have happened if we still had our dollar said silver certificate at the top? I don't think so. I don't think so, right? And I wonder, this is great, but I wonder let's go look. Let's go. I may look like a complete fool here, but let's go look, right? So let's say the price of gas has gone up 30%. Yeah, roughly, right? Maybe 40%. Let's go look and see from November of 2020 how much silver has gone up. Did silver keep up with the price of gasoline? I could look like a little more foolish than I may already look right now. Let's go take a look and see if that was indeed the case. So let's get rid of the debt clock. Oh man, look guys, the national debt went up more. Surprise, surprise, surprise. But the dollar to silver ratio is still at 531. Okay, that's not what we're here for. We're going to do this quickly. We're going to check and see if the price of silver kept up with the price of gasoline. Come on. Come on, baby. Don't fail me now. There we go. Gold down $12. What? That's not good. Okay, silver down 3 cents. No. Okay, this is the silver's futures market, but let's go look November. I'm just curious if silver would have kept up with the increase. We'll go to max. We'll go to full screen. Okay, and we'll go back to, that'd be 5 years, so we'll do 5 years. 2020. Well, I don't know. Maybe it didn't. Okay, November. We'll go to this date. We'll be selective. Let's say in November, the price of silver was about $23. The price, so November of 2020, when gas was $1.80, and we're going to say gas is up, what, 30-40%, and we'll say that the price of silver was around, we'll say $22, and now it's at 30. That's 8. Yes, I mean the price of silver, I think we could easily say is up 30%. So during that same time period, right, where we had gas go from $1.80 to where it is today, the price of silver definitely kept up, right? I mean, we'll take a win. We did some rounding. It actually maybe even more than kept up. I don't know. If I have time, I'll dig into it later. I do know one thing for sure. I'm really happy that you guys decided to join me today. It's a big deal that you come to the basement. Tomorrow is the Super Bowl for the gold and silver markets, for the Fed with their interest rate cuts. It could be crazy. Be prepared, right? It's going to be most likely a very volatile day. Are you ready? Can you deal with it? But I want you to think about this. We've been through so much together already. I mean, we've been through some crazy times, basement dwellers. Big, massive down days in the gold and silver market. Big, massive up days. Our foundation remains solid. And we know what our foundation is made out of, right? Our foundation is made out of this: silver, gold, precious metals, right? We're like that upside down pyramid, right? John Exter's pyramid. They aren't going to shake us. And no matter what happens tomorrow, we're going to be okay. No matter what happens tomorrow, I'll be back on. I'm going to be kind of on the road a little bit tomorrow at one point, so I may be at a remote location, but I'll be back and we'll do a kind of a recap and gather ourselves after what happened. Most important, thank you guys for being here. Thank you for being part of Ron's Basement. It's a big deal. Thank you to our moderators, Jake from Jake's Custom Parts, Annie Oakley, Big Tim the Silvershire, and I think Silver Susie got irritated with me and took off for a walk, but thanks to Susie as well. We love all you guys. You're a part of the group when you're here in the basement, okay? You can call yourself a basement dweller. We know you're also a you. You're the biggest part of the basement, okay? You're part of the club. You're welcome here, and I'll look forward to seeing you next time.